breaking news. The Federal Reserve just making its decision on interest rates, and notably, it's a decision that comes without critical economic data used by the central bank to make monetary policy.
Yeah, that would be helpful to have. Let's get to CNN's Matt Egan, who's at the Fed. Matt, obviously, we're all awaiting this. What can you tell us?
Well, the Fed just delivered an interest rate cut, and it is the quarter-point cut that was widely expected. So this is the second straight interest rate cut from the Fed, and it does lower Fed rates to the lowest level in 3 years. This shows that Fed officials are clearly more concerned about weakness in the job market than they are about stubborn inflation. Fed officials, in the statement that they just put out moments ago, they reiterated that risk to employment rose in recent months and that job gains have slowed this year. Now, what's unusual here with this decision is the fact that the Fed had to make it while flying mostly blind. Because of the government shutdown, many of the indicators that officials typically rely on were not available. That means that this was the first time since the Fed's rate-setting committee was established back in the 1930s that they had to decide on interest rates without the monthly jobs report. And the Fed statement, it did allude to this problem, which is a big problem for Fed officials that consider themselves data dependent. There's just not much data out right now. But they did insert some new language that alluded to this. For instance, Fed officials said that available indicators suggest that economic activity has been expanding at a moderate pace. Previously, they said recent indicators. Also, Fed officials said that the unemployment rate has edged up but remained low through August. That's because we don't know what the unemployment rate was as of September. And in this statement, they also said that more recent indicators are consistent with these developments. That seems to be a reference to some of those private alternative economic numbers that get put out and that we know Fed officials look at. So what does all this mean for viewers at home? It does mean that borrowing costs are coming down. This is helpful for people who have credit card debt, home equity lines of credit as well. And I do think that this does show that right now, the big focus for Fed officials remains on protecting the job market. They clearly are not as concerned about stubborn inflation. Boris and Brianna?
And Matt, what are you going to be listening for from Jay Powell, the Fed chair, when he speaks moments from now?
Well, first off, everyone wants to know what is Fed Chair Jerome Powell thinking as far as an interest rate cut at the next meeting in December, and what about early next year? Also, what is Powell going to say about what are the economic indicators that he's looking at during this government shutdown? I'm interested to hear what he says about some AI-driven layoffs, such as the mass layoffs that we heard about from Amazon as well. And just one last point for you, this was not a unanimous decision. 10 officials, including Jerome Powell, voted in favor of this quarter-point cut. One official voted for no change at all. That was Kansas City Fed President Jeffrey Schmid. And one official voted for an even bigger cut. Not surprisingly, that official is Fed Governor Stephen Miron. Back to you guys.
All right, Matt Egan at the Fed. Thank you.
Our business editor at large, Richard Quest, joins us now live as the news, of course, starting to break. And Richard, as you look through your email, good to see you. I know that markets were pricing in a 25 basis point, Richard. What are you seeing? I'm looking at my phone as well.
Yeah, it's gone. The Fed has lowered rates by 0.25 percentage point. They did the same thing at the last meeting, and so they've now the Fed so-called Fed funds rate is 3.75 to 4%. It says once again that the worrying part from the Fed's point of view is jobs. Job gains have slowed, and the unemployment rate has edged up, says the Fed. Inflation has also moved up and remains elevated. Now, what's interesting is we are heading into the scenario that really Jay Powell, the chair, doesn't want, which of course is higher inflation, stubborn unemployment, and he has to cut rates because he has to choose between unemployment and inflation, which is the most pressing problem. It's a very rare scenario that the Fed finds itself in, but now it's clearly made its choices. The core issue is that of unemployment, and so the Fed has cut rates to bolster the employment or the unemployment situation. Let me just read you the one bit. Here we go. As I've just proven myself right, if you will. The committee is attentive to the Yeah, the committee is attentive to the risks of both sides and judges the downside risks to employment rose in recent months. Voting against was our Mr. Mirren, Stephen Mirren, who wanted to lower rates by 0.5 percentage point, and Jeffrey Schmid, who preferred no change at all. What a fascinating Fed. We've got a majority for lowering. One wants to go faster, one wants to go slower.
So, Richard, just, you and I have spoken about this because of the US government shutdown, there are lots of readings we haven't had, right? And I've asked my producers to put a graphic up just so viewers get a real sense. We haven't had jobs report, jobless claims, jobs report, PC prices. All of these have been delayed, of course, because of the government shutdown. So how do they make these policy decisions while in the dark, Richard?
Well, they have other numbers. They have a lot of private economy numbers, those from banks and economic forecasters. So they've got a vague idea. And also they knew the trajectory. There are other numbers from those parts of the economy that are still functioning. They can extrapolate. It is a poor best, by no means satisfactory. The quality of the data that you just showed is really essential, particularly the jobs, particularly when jobs is the number. But we do have private surveys that show the number of new jobs being created, the employment scenarios. They're just not as robust, they're not as big, they're not as, they don't have the same integrity. There is a clear, I wouldn't say they're flying blind, but they've certainly got an eye patch on and it's foggy weather outside.
Right, so when we listen to Jay Powell in less than 30 minutes or so, Richard, what are we looking for? Because last time you and I spoke, it was concerns over inflation. Now it seems concerns over employment, right?
Yeah, and that's been the concern for the last couple of meetings. Yeah. What I'm listening for, number one, the very point you just said. How far off is he? How worried is he doesn't have the tightness of data he requires? Number two, is he done? Bearing in mind, look at that split. One wants more, one wants less. The majority. Are the Fed done for now while they wait for quality data that really shows what's happening? My guess is they are done. Maybe one more cut, but they're not on a tear to cut much more than this. They need to wait. They need to find out. They need to be more data dependent. And for that, to be data dependent, Issa, you need to have data.
Yeah. It would help, wouldn't it? At the moment, they're in the dark, like you said. Richard, good to see you live for us from Riyadh.